Hello, everyone. Welcome to today's session. Let's jump right into it here. We'll go over market conditions here and then talk about some current stocks and some trends that are happening here. Not a whole lot changing, obviously, here in the last few days, other than last night we had NVIDIA earnings, which, of course, really were blockbuster, just unbelievable. Honestly, just the amount of money they're bringing in is really impressive. Their quarterly numbers now are as big as they were annually for the last few years, billions of dollars a quarter. So the AI boom is certainly on and still beginning. And one of the things that was interesting about that report was the other companies that are buying from NVIDIA. It's Amazon, it's Microsoft, it's Apple, it's Meta. These companies are buying billions of dollars worth of these chips. So it's going to be an interesting time here over the next few years to see really how AI gets implemented. But it takes chips, it takes memory, it takes computational power, and anything in those realms. Data centers are going to continue to do well. That being said, it's ridiculously high. That high can be high. Let's take a quick look at NVIDIA and see today. So it's interesting, this breakout pattern right here. It's such a mental game that we play, because when we're dealing with stock charts and we look at a stock chart that looks something like this perspective right here, this for a lot of people is really hard place to buy, because it feels like, well, I should have bought here, or I should have bought here, or I should have bought here, or we tell ourselves these things over and over again, versus, okay, I'm not going to buy here because it's going to move up and then it's immediately going to start to turn back down. That certainly can and does happen. But in this case, as far as what we're looking for, this is the exact type of setup that we would want to see. I will admit, NVIDIA, this breakout move here on NVIDIA that we had early in the year I was a little skeptical, because we had this long consolidation breakout. How much more are they going to make? But this AI move is certainly real. So let's talk about this methodology, because this is a good example of what momentum trading does. It's a good example of what we're looking for, and it actually makes it easier when we know what we're looking for, right? When we can pull up a chart and we know what we're looking for, and we could say, oh, okay, that's something that I would take. That's a trade that I would take. And this is a good example of that. This is in the upper momentum zone here, in that 236 zone. Really, any of these signals along the way would have also, been signals to be able to take. This just happened to be that real big breakout move, confirmation bar, solid green bar, the entire body, and big volume. So those are ideal, and it wasn't extreme. It was still relatively early in that uptrend. Actually, this is as of today. Sorry, that's not as of this move here. But if we were to move along here and we take that and we move a day or two and we get this uptrend, and if we just take a few days and look what's happening to that breakout point, okay, all of a sudden now here we are, and we're saying, now it doesn't look quite as intimidating, right? It's like, oh yeah, I easily could have, should have, would have, fill in the blank in terms of regret. Sometimes when we don't take trades that ultimately work, that's just also the nature of trading, is we can't pick them all or win them all. And sometimes we just miss out on some. But in this case, this would have turned out to be a great trade. Now, same story here. How high is high? Okay, and that's the game that ultimately we play, to say, well, who knows? It can continue to move higher. If I'm going to enter into a trade, I define what my risk location is and say, I'm going to enter in, I'm going to set a stop loss, I'm going to trust that it goes higher. If it doesn't, I'm going to set a stop loss to exit. End of story. Not much more needs to go into the thought process than that right there. I'm going to enter the trade. How much am I risking? What happens if I'm wrong? What happens if I'm right? Okay, so this certainly could go higher from here. This is a crazy number right here. That's 1.7 trillion market cap. Okay, so they're pushing 2 trillion market cap. I think now they've become the second or third largest in market cap. So these guys, you know, at the rate that they're going, they certainly could take over a lot of at least in valuation type numbers. Interesting things happening in that entire world, but it's not going away. It's, you know, certainly going to see some volatility, ups and downs, slowdowns, speed ups, those type of scenarios. But the need for computational, pardon me, let me grab a drink real quick. For computer chips and faster chips and cleaner and less energy, and you know, that's just that's the nature of what we've been in now for really 30 plus years, 40 years of this information age. And the and that's the other thing, we got super computers coming on board. We've got, you know, conductivity metals or alloys, or, you know, ways to be able to these transistors, the way that the energy or the electricity, the information is passed. And it's just fascinating to me. I love it. And it's an exciting time. NVIDIA is the leader, obviously. Thought I'd go through and talk about that a little bit in terms of their progress. This earnings number is not reflected as of now, but you can see just these earnings that they've got year over year, quarter over quarter, are it's just unbelievable. But it is believable at the same time with what is happening in the world. Let's jump over and talk market conditions. Same story with the market conditions, where we're dealing with momentum slowing and breadth slowing and sentiment there's no fear yet. It's all complacency, which is fine. We don't want that, but it just means sentiment is often an indicator that, where's my refresh button on that? That one's not showing up. I'll have to look and see. But sentiment is basically, you know, volatility. The lack of volatility is forecasting future volatility, and when you're in volatility, that is forecasting a lack of volatility. It's just like a weather storm. It's like the fact that you're in a storm is forecasting sunlight in the future. The fact that you have sunlight, you're going to have a storm at some point in the future. So volatility is the same way. When there's no volatility, or everyone is complacent in the market, that's forecasting future volatility and future fear in the market, because it just swings, it ebbs and flows both directions. You get the fear cycle of sell-offs. Selling creates more selling, and then you get the greed cycle where buying creates more buying. You get fear of missing out, which creates more buying. You get short covering, which creates more buying. And so the buying creates more buying. Just the very fact that it's going higher creates a higher probability of it going higher. And that's what we want to participate in, is those trending moves, as long as they're continuing to move. The hard part comes, and the risky portion starts to come at these levels that we're at right now. And that is how high are we going to get on this indicator? I haven't seen this indicator. I've seen it a little bit higher in the 20s, but it doesn't get much higher than this. So what does that mean? Okay, does that mean it can continue to go high? What are the probabilities that this chart goes straight up? Okay, I don't know, but it's definitely a possibility. But we deal in probabilities as well. And that is we get sucked into these emotional scenarios where we're moving higher, it's feeling good, and we just start to realize that a move that goes straight up ultimately is not sustainable. Sometimes that can create additional fear. It can create additional paralysis of just freezing us to say, I don't know what to do. Should I be buying today? The market's already at all-time highs. Or should I be starting to create additional hedges? Should I not be placing as many trades? And those are the processes of a trading plan to start answering as you're going into the trading plan, so that you're not just making things up along the way. And so these areas right here are times, they're time to adjust essentially the trading plan, or follow the trading plan. And that is, okay, market conditions are overbought. We know they are, but they're still trending higher. I don't want to miss out on things, but I also don't want to be buying in aggressively at the top. So knowing the other thing too is buy sell ratio is still relatively muted right here. We're just not seeing mass excitement that we saw earlier in the trend where everything was participating. Now there's not a lot participating. There's a handful that are participating, again, which is fine. It just means that the breadth of the overall trend may not be sustainable. And we know that stocks like Nvidia, Tesla, Microsoft, Amazon, Meta, are all moving the market right now. It's just those stocks that are moving, and they are they're almost their own country. They are economies in and of themselves, and the amount of spending that they do trickles down to so many companies, and a lot that don't participate. So we are seeing some that are moving lower. Now that doesn't mean, again, the harder part is, what does this mean going forward? Well, we don't know. Obviously, we don't know exactly, other than trends that get extended retrace, and trends that, whether it's an uptrend or a downtrend, they're going to retrace to some particular point. Let's take a look at SPY. Okay, let's look at the 1-year time frame here. Now we know, based on this analysis, that on the 1-year time frame, and anything that is above that 236, we start to get some distance. Once we're getting more and more distance, now we're a long ways away from that. In that area, this becomes our entire range of potential playground, where there's support areas here, there's support areas here, there's support areas here. And how much retracement do we need in order to have some fear and have some fear starting to show up? Well, it's not today. And we're continuing that overall uptrend, which is great. We'll continue to watch that. Now, what does that mean for portfolio? The biggest thing that I can kind of stick into your brain is portfolio management, and that is, what do I want, what are my goals, and what are my needs, and what's my risk tolerance? Can I support a 10% portfolio retracement or a 20% portfolio retracement in the next 1 year or 2 years? If the answer is no, then you want to make sure that you're allocated in assets that are not as volatile. Okay, cash is obviously one of them. Cash is not paying that bad either right now, 4 or 5%, and you're safe. You're not keeping up with inflation, but that discussion is textbook. That's theoretical, in my opinion. When you start saying, well, if I put my money in cash, I'm not going to keep up with inflation. Well, yeah, over the next 5 years, 10 years, something like that. Over the next 3, 4, 5 weeks, or 2 months, or 3 months, if I need to move money to cash to sleep better at night, or to make sure I've at least, I've locked in the lack of, I've locked in ways to reduce my volatility. I'm reducing my exposure to risk. Those are decisions that are best made in this condition. They're not made. What ends up happening is we get that big sell-off, and then we're like, damn, I wish I would have been paying closer attention here. And then we start selling on the way down, which is also fine, because here you look at an example of, once you start to get these trend shifts, you get some additional volatility, but when it does roll over, it can start to trend lower. And at some point, you're going to get some signals and confirmation to start playing again. Let's jump back in and let's start participating. And as of these levels right here, now the other side of that is, well, where do I move that to? I still want to participate in stocks, but I just don't want to run the risk of having all of my money, my entire account, dropping by 10, 15, 20, 30%. If we get a pretty big retracement, it's entirely possible for that to happen. So my message today is, let's not get overly complacent where the markets are at right now. Yes, it feels great. Yes, it's working, but how much longer, and are there going to be any little hiccups along the way? There will be, but as of now, that was a great number for Nvidia, and a lot of these profit earnings calls have been quite good for a lot of companies. So we'll see if that continues to play out. Sectors, if we take a quick look here at sectors, we are seeing some additional strength in sectors. We had seen 4 or 5 of these in that hold range. We still have this telecom, which is in the sell trend. Let me pull this into 6-month time frame here, which is interesting sell-off. I don't know exactly which stocks are included in that ETF and in that sector, but it's definitely lagging right here. And we're seeing some that are continuing to do well. These technology shares, they're going to pull back up into that buy range today. There you go. You can see that big gap, big move. Nice location here as well on that 6-month time frame, right around that 236 zone. We get an ABC counter trend, retracement, some support, good earnings report from a bellwether, and back off to the races here again. Buying the dips is still in vogue right now, and really the best strategy. And in terms of how you're going about that and doing that is within that overall trading plan. Now, in the muscle wheel portfolio, we got stopped out of five or 6 trades yesterday. It was a pretty volatile day, and that can happen when we start to get some retracement. We get kind of clean house a little bit sometimes of stocks that are getting a little bit more risky. You're starting to see some selling starting to happen. That the natural evolution of portfolio construction and management is basically looking for, naturally getting stopped out of things that aren't working. Okay, so we've got some that are continuing to work, closed out, a few things that we had some gains on that we've stopped out on as well. So the current holding now looks something like this. It's about half, a little bit less than half in cash. I do have that SQ's hedge set up here. And then we've got some nice holdings that are continuing to do well. A few that are getting started or underwater and just getting, just trying to get a bounce right here. And some that are really creating some stability and have some nice overall uptrends that are happening. That's just this natural process of what's working and why. Oftentimes we want to, for me, one of the hardest things is to really pinpoint and say, yep, NVIDIA is the one. It's going to be, I'm going to put all my money in that, and away we go. I've never trusted that process. I've always wanted to be able to participate in some of these other names that can give you these fantastic returns, but maybe are not, an Apple or an NVIDIA or a Tesla. And we also don't know which one is going to be the one that really gives us that big move. So we have to participate in a lot of stocks over the course of a year to be able to get a couple that really start out nice. For example, we got stopped out of quite a few stocks yesterday, and so far, let's see, where is that? It should be right around ASPI. That was our pick for today. Okay, so we entered into it this morning, having a nice run. So there's always going to be stocks that are working. The ones that aren't working, we want to just get rid of them, and that adds volatility, that adds stress, that adds stop outs, that adds indecision. Lots of those things can happen. Granted, sometimes we need a little luck on our side and getting into the right stock with the right pattern. But in terms of this pattern, it's simply looking at this move right here. This was the day before the market opened. Retracement, nice 236 range, a support range here right at this area. Confirmation, really nice looking bar with a sell-off and a bottoming tail bar here as well on big volume. And it's in the semiconductor space. It's a really interesting stock, actually. Suggest you go do a little homework on it. It's really interesting. So we get a move like this today, and yay, right? That's kind of what we want. So we get stopped out of something else replaces it, and that can happen on any day. That can happen on any group of stocks, and we just continue to go along and trust the process and trust the direction. And we're going to get some of these stocks that really work. We're going to get some that stop us out. We're going to get some that go 40 or 50%, and then we get stopped out. There's some volatility. We're going to get some that go 150%, and then we start to take some gains off the table and let some of those runners continue to go. So there's always opportunities out there, and particularly right now, I think going forward this year, I think it's really going to be a stock picking scenario, a stock picker's game, because of how heavily overweighted the markets are in some of those big bellwether stock names. But when they turn, when the markets turn, a lot of times everything else will turn. And so we've got a nice update today. Stock is working, and that's fantastic. Better day than yesterday. And that's sometimes all we need is just a better day than yesterday. Regroup, reset, analyze what we're dealing with in terms of our risk levels, how many positions we have open. Are they positions we want, or are they just adding additional risk and weighing things down? If they're not moving, typically we want to get rid of them relatively quickly within a week or two if they haven't made a move. Usually they have, or we've been stopped out of those as well. So some ideas, just some discussion there in terms of what we're looking at. The new buy list, we'll take a quick look here and then we'll finish up. But there are some interesting names. Still seeing lots of pharmaceutical, biotech names, and some home builders, which were actually in there. I mentioned that in the update this morning, and some energy stocks. With oil doing what it's doing right here, if we come over to commodities and we pull up oil, see what it's doing today. So there's this resistance range right here at this 73.56. A lot of resistance. You can see it was all of these levels that it's been touching. If oil breaks out of that move here and then starts to find some support, I think you're going to start to see more energy stocks show up in the scans. And we're seeing a few. Southwestern Energy was one, a big mover yesterday. 6-month time frame doesn't look great, but the 1-year time frame, you can get a little bit better perspective on, this big uptrend, this long retracement, consolidation, and potential breakout here. I'd keep an eye on some of these oil stocks. And remember, one quick way to be able just to analyze those is if you go to sectors and go to sector scan and then come over here to oil and energy. You can either look at the industry that they're in, oil and exploration. You see in 31, it's got a buy sell ratio now of 5. So you are seeing some of these energy stocks, or at least these oil stocks, that are starting to get a little momentum. SWN, Southwestern Energy, leading the pack with the rank. Let's look at GPOR and see what that one is. That actually is a nice looking pattern here as well. On the 1 year, on the 6-month, also breaking out into that upper range. When it gets a little sloppy like that on the 6-month time frame, then if you just zoom out just a little bit and go to the 1 year and say, okay, that's not quite as sloppy as that 6-month time frame looked like. It's a really long uptrend and it's potentially breaking out right here as well. That would be the first stop I would look. I'd look for those leaders. You want to find what are the leaders doing. We're not interested in anything else. We're not interested in the dogs that are down here. Let's focus on the best of the best. They're moving to think that they're worthy of being bought into. They're the ones that have done all of the homework. They're the ones that have everybody looking at the income statements and the product line and the risks of delivery and supply chains and management and debt and all of those factors. Large institutions, I guarantee you, have 20 people, or depending on the company, maybe more than that, per sector, per group, for industry, and maybe even per stock, for handfuls of stocks. If they're buying aggressively in it's institutional money and it's big names that are coming in like CNX, also that had a big move yesterday. That's not my 100 shares that are going into that. That's institutional money. That's the place to be paying attention to as well, is that upper tier, ideally above 90, but if you're looking as well, anything above 80, it's starting to move and it's up in that upper range, are areas to be looking for. And these are the ones that are just continuing to chug along. Even when oil retraced, they still had this relatively consistent overall uptrend. A few of them have already popped pretty nicely, FANG. So just a quick way to be able to analyze and say, well, oil looks like it's going to go higher. What should I be looking for? Which stocks am I going to be focused on from here? And from there, which ones would I enter into? If I were to look at Southwestern and say, okay, I'm going to buy that one today, then what I would want to do is just determine where's my stop loss, right? We go through this process of how many shares should I be buying? I want to do, if I did 100 shares, That's 0.6 of my portfolio. If I do 500 shares, it's 0.3. That's too much. Remember, I want to be 2 to 2.5%. So we're 250. That's 1.69. I can go up to 300. That's 2%. That's about where I've been doing these lately, is about 2 to 2.5%. Just because of market conditions. We're a little bit extended. I don't want to be taking a real large position in some of these. And that, it's a double-edged sword, because you take a little higher position, maybe oil and energy are the ones that really start to take off. We've got too small of a position. We're not going to really benefit from the upside. So there is a fine line between too small of a position and too large of a position. And as of my experience, 2 to 2.5% for me personally, it allows for nice returns, and it allows for us to have some volatility. Even some of those stocks we got stopped out of yesterday, they were down 20%, 25%, and because we're using this methodology of relatively small positions and then a fairly wide stop loss, they become insignificant. They're not life-altering stop outs. Okay? And if you've been trading for any length of time and had too big of a position, and you've experienced a life-altering stop out to where it's like, oh boy, that hurt bad, and it might take me years to recoup. Though that's what I absolutely do not want you ever to be even put in a position to experience. And the only way to do that is with position size and stop losses. Okay, let's chip away. Let's get a lot of base hits, a lot of doubles, and then we're going to there'll be a home run in there once in a while, and we get a really big gain. But most of them, we just want to worry about our risk. Let's let the market's going to reward us over time for managing our risk. That's our job. Our job is to manage risk. We have no control over what the stock does. We have no control over what the market does. We don't even pretend to know what the future holds. It's just simply we're focused on what's happening now and the trends that are taking place, and we want to be able to reduce our risk as much as we possibly can and still play the game. Okay, you take too big of a risk and you have 2 or 3 bad situations and you're done, and that's not fun. It's not fun to have to go sit on the sidelines because you blew up a trading account. So this approach is, it's still aggressive enough to get some good returns, and it's aggressive enough you're going to get some volatility, but it's conservative enough that 1 or 2 or 3 or 4 or 5 or even 10 bad trades in a row or at once are not going to be a really significant scenario. Now let's look at a stop loss. So let me quit blathering here, and let's take this all the way down to this low point. Let's say we're willing, we think this trend is intact. We think that oil is going to continue to move higher. We think that this stock is going to participate. Therefore, we also want to participate. But where's our line in the sand? Is it here? Is it here? Let's say that we're willing to put our stop loss all the way down here. That gives us this much room of potential volatility for it to get its act together, right, and start moving this direction. Let's see what that looks like then. That number is around 630. Let me just put 630 in as our stop loss. 6.3, oops, 6.3. And that puts us at 2.1% at risk, or $200 at risk. It's a 10% stop. So this is not a real volatile stock. That looks volatile, but from here to here is only 10%. So that's actually a nice setup, because it's an easy location for us to manage the risk. And there's a lot of resistance, support levels happening right here. All of that price activity, all of this data that's been happening right here is support. So if it were to pull back, this would be a support zone first and foremost for more upside. If it fails and drops all the way down, then this is where we're exiting. And if we were to exit and get stopped out of this trade, what's that going to cost me? It's going to cost me $216. Am I okay with that? Am I okay with that for potential upside of a whole lot more than 10%? Who knows how much more, right? Could be hundreds of percent, could be 10%, could be 20, could be 30, could be, who knows? We don't know the upside, but we don't have to know the upside. Our expectation for the upside is that it's going to make us money. We just don't know how much. We just need to make sure that we're not losing anything aggressively to begin with. So $216, I can live with that. I'd set a stop, buy it at this price, adjust the stop loss as it's going higher, and see what happens, right? It doesn't have to be much more difficult than that. Essentially, that process of what am I buying and why, and what's the position size, and where's my stop loss, and then I'm managing the stop loss as it moves higher. Okay, I'm adjusting that stop loss as it's moving higher. Case in point, and I'll just talk about that quickly, and then we'll finish on this note. So a couple of the trades, for example, let's look at it was APLN is having a big move today. So, and we bought this stock right here. This confirmation bar, as it was breaking out, it's continuing to move higher. Now the stop loss adjustment, you start out with that initial stop loss here, and it moves higher, and then we get a retracement, and we can adjust it. One of the ways to be able to adjust those stop losses is when you have this connecting to the new high and the swing low of the trending time frame, and in this case we're using that 6-month time frame. This 236 retracement works great as a stop loss adjustment. You see how it's pulling it higher. When this goes higher and this goes higher, this is going to go higher. I did this earlier, but let me do it once again so we can just kind of see. Okay, when it was right here, this could be a stop loss location as it's moving higher. Now we're a little bit higher. So we're at 23.82. Now we're at 24.83. I'm looking at this line right here. See how it's every time it connects to a new high, it's pulling it higher. This would be referred to as a trailing stop. It's not a percentage stop, but it's still a manual stop loss. You still go into your brokerage account and change this number manually instead of it automatically pulling it higher. But it is allowing you to have a frame of reference to say, okay, I'm using that as my stop loss. Every time we get a higher price, I'm adjusting my stop loss. So when we first started out that discussion, it was down here at what, 24 something, now it's 27 something. So that as that's moving higher, we want it to do that. We want it to do exactly what it's doing. We don't want to sell it yet because we want to see how high this can possibly get. When we do sell it, we start to sell out. We start to rebalance the portfolio when we're rebalancing this number here. If we have something that starts to get a little bit larger, we sell it back to that 2.5%. Okay, so that's one of the ways that we're exiting trades is once we got a winner, we're selling a portion of those shares back into cash and then buying something new with that cash as it's moving along. Great topic. That's one of my favorite topics to go over is the implementation and the execution of the stock. Here's the stock, here's the entry, here's the stop loss, here's the position size, here's my thesis in terms of why I think it's going to go higher, which should be the last thing. There doesn't have to be a thesis. It's simply going higher. And therefore we're trusting the market. We're trusting the buyers of that stock that it's going higher. KB Home, for example, this is a home builder about to break out. Lots of consolidation here, choppiness, whipsaw activity. But as it's going higher, yes, I could add a thesis saying home builders are going higher because XYZ, people are buying more homes, or people need a place to live, or whatever. The interest rates are going to come down and come lower. Whatever that reasoning is, my experience is it's almost always wrong, okay, and it's almost always irrelevant because who knows? There's millions of people buying this stock for different reasons. Yes, that is probably going to be the reason why it does go higher, but I don't know, and I don't have to know. I just need to know that it's moving in this right direction, and there's times where it doesn't. We stop out, we get rid of it, we move on, we repurchase here. If that's something that I really wanted to be into, I would rebuy it here because I don't know if a sell or a stop out is going to turn into this. I don't know that. I don't know if it's going to turn into this. So I've got to follow some rules when it starts to move against me and I'm now at risk of losing capital, which is the number one rule we want to follow, is not to lose any of that capital as much as we possibly can, or at least define what we're willing to lose or willing to risk if we do get stopped out. Money management, risk management, the most important part of investing and trading by far. And if you can really get focused and understand what your risk is on every single trade, understand what's happening and how you're managing that, you're going to be so much further ahead of this game because it's about managing risk and then having a system for buying and selling And that's what we're offering. So if you want to join me in the wheel portfolio, I do have that link at the end of the video, and you can come and participate. Essentially what we're doing every morning is I'm adding those stocks, explaining why, showing the stop loss, explaining the portfolio adjustments that we need to make that day. If we were stopped out, if we're selling anything, if we're adding hedges, we talk about all of that in the wheel portfolio. I appreciate everyone's time and effort, and have a fantastic week, and we'll see you next time. Bye now.